George Soros once made $1 billion in a single day. He didn't build a company. He didn't invent a product. He simply understood power better than governments. But here's the irony. George Soros's biggest mistake wasn't in the stock market. It was believing the market could fix power. And that mistake cost him hundreds of millions of dollars. George Soros is not a normal investor. He survived the Holocaust. He escaped communist Hungary. He didn't trust systems. He studied how systems break. His hedge fund, Quantum Fund, became legendary, and in 1992 he earned the nickname, the man who broke the Bank of England. So when someone like Soros gets something wrong, it's worth paying attention. In the early 1990s, the Soviet Union collapsed. Communism fell. The Cold War ended. Russia suddenly opened its doors to capitalism. Investors saw opportunity. Politicians saw hope. And George Soros saw a once-in-a-century moment. He believed Russia could transition into free markets, democracy, open society. So Soros invested hundreds of millions of dollars, not just in companies, but in the idea of capitalism itself. Soros believed something very important, that markets and democracy grow together, that once you introduce capitalism, institutions will follow. Laws will strengthen, competition will rise, corruption will fade. On paper, it made sense. But reality had other plans. Soros underestimated power. Russia didn't have strong legal systems. Courts were weak. Regulations were fragile. And political connections meant everything. Instead of fair competition, a small group of insiders took control. They became oligarchs. Wealth concentrated. Rules collapsed. Capital fled the country. The market didn't correct the system corrupted the market. Soros lost hundreds of millions of dollars. But what made this different? He admitted it publicly. He said, "I misunderstood the nature of Russian capitalism." That sentence matters, because most billionaires never admit they were wrong about power. The deeper lesson. Soros didn't fail because of bad timing. He failed because he believed markets alone can fix broken systems. But markets don't create morality. Markets amplify incentives. When rules are weak, the powerful win faster. This lesson changed how Soros invested and how he thought about the world. He realized power always comes before profit. This mistake isn't just about Russia. It applies to emerging markets, political investing, crypto, tech monopolies, even social media. Anytime investors ignore power structures, bubbles form. And when they burst, ordinary people pay the price. George Soros once said, "I'm only rich because I know when I'm wrong." His biggest mistake taught him a brutal truth. Markets don't fix power, they reveal it. And that lesson is worth more than $1 billion trade. This video is for educational purposes only, not financial advice. If you found value in this story, like the video, share it with someone who needs it, and subscribe for more true market stories.